Topic 5. Adjustment at the end of accounting period. Depreciation expense. Depreciation expense. Buildings, equipments, and motor vehicles, assets that provide service for many years, are recorded as assets rather than an expense on the date acquired. What is depreciation? Depreciation is the process of allocating the cost of an asset to expense over its useful life. At the end of accounting period, we have to make an adjustment for depreciation expense of non-current asset that we own, because depreciation is a process of allocating the cost of an asset as an expense over its useful life. How to journal depreciation? The journal entry will be debit depreciation expense. Why do we debit depreciation? We debit depreciation because depreciation is an expense. Expense increase, we debit. Parts by parts, the cost of the assets we treated as an expense over the useful life of an asset. We have to credit accumulated depreciation, as accumulated depreciation is a contra accounts to an asset. Therefore, journal entry for depreciation expense will be debit depreciation expense, credit accumulated depreciation. To understand the concept of depreciation, or to get the clear picture of the concept, let's look at this example. On 1st January 2020, Syarikat Ketwa purchased a vehicle for RM100,000, useful life of 10 years and salvage value of 0. How to calculate the depreciation? Depreciation expense equals to cost minus salvage value divided useful life. Cost of RM100,000 minus 0 divided by 10 years, we get the amount of RM10,000 per year. How to journal? Journal entry will be debit depreciation expense vehicle RM10,000. Why do we debit? It is because parts of the cost of an asset we treated as an expense over the useful life. As expense increase, we debit. We credit accumulated depreciation vehicle. Why do we credit? Because accumulated depreciation is a contra to an asset. Normal balance for an asset is debit. Therefore, contra will be credited. Description will be to record depreciation expense for vehicle. How does it appear in financial statement? Syarikat Ketwa Statement of Comprehensive Income Partial for the year ended 31st December 2020. minus under expenses, depreciation expense vehicle for 10,000 ringgit. While in Syarikat Kekwa, statement of financial position partial as at 31st December 2020, we recorded under non-current asset vehicle for 100,000 ringgit minus accumulated depreciation vehicle for 10,000 ringgit, we get the net value of 90,000 ringgit. As for Syarikat Kekwa, statement of comprehensive income partial for the year ended 31st December 2021, we minus under expenses, depreciation expense vehicle, another 10,000 ringgit. Syarikat Kekwa, statement of financial position partial as at 31st December 2021, we recorded as follow: non-current assets vehicle 100,000 ringgit minus accumulated depreciation vehicle 20,000 ringgit, we get the net value of 80,000 ringgit. But why accumulated depreciation is 20,000 ringgit? It is because accumulated depreciation is depreciation expense for the current year 10,000 ringgit plus depreciation expense from previous year another 10,000 ringgit, come to the total of accumulated depreciation of 20,000 ringgit. Therefore, net value vehicle will be 80,000 ringgit. Let's look at another example of generalizing the depreciation expense. Example, for Pioneer Advertising, assume that depreciation on the equipment is 500 ringgit a year. The amount of the depreciation given, so we don't have to calculate. Straight away, we journal. Debit depreciation expense equipment 500 ringgit. As an expense increase, we have to debit. We credit accumulated depreciation equipment for 500 ringgit. Why do we credit? Because accumulated depreciation is a contra to an asset. Normal balance of an asset is on a debit side. Therefore, contra will be on credit side. Description will be to record depreciation expense for equipment. That's all for today, and thank you.